Morning, guys. John here, Mr. Forex Fire. It is the 14th of October, a Thursday. I'm a day behind on myself. I keep thinking it's Wednesday, simply because I was at the hospital Monday. So for me, I feel as if I'm a day behind on myself. So I keep thinking it's Wednesday. But hey ho, let's have a look. So we're going to share the screen where we ended yesterday. We were asymmetrical compounding yesterday. We had a really good session on yesterday, and if you haven't seen it, I urge you to go back and have a look at that, because it was a really good look at how you can 10x your risk to rewards. So we ended up with 2% gain yesterday. From there, one thing I can't do today is, once again, paper trading is down. That was something I was going to do and showcase, so we can't do that, unfortunately. But what we'll do is we will go and have a look at the charts, okay? And everything has been met and much, much more. We can see we came down yesterday. After yesterday's session, we come down and mitigated on the lower side, and then all the higher sides were taken out. So the bias that I continue to give on a day-to-day basis is actually serving us well. Let's just take a look. We're just going to get rid of all of these. We'll get rid of this. And we're just going to check our time, because it's always good to start your day with having a general bias of direction. Okay, so what we're going to do, again, we'll get rid of the noise. Get rid of the noise. So from here, guys, we're going to get the path. And you know what we do. We come out of what we worked yesterday, and we work to the general swing high points and swing low points. You do not have to go in, out, in, out, in, out. You just do the prominent ones that you can clearly see. And there's a reason why we do this, is because the way it works, by the time you go up the time frames, this will generally give you your 15-minute sort of preference within price. Let's do that. We'll move that as a down. Let's make that up and we'll go there. Right, so what we're going to do, I'm just going to show you. So as we move into price, you'll see this would be the higher time frame. Okay, now as you go up a couple of time frames and you scroll into them candles, you see how this more or less plays out pretty well. It plays out really well, to be fair. And if you go up to the half hour, which again is super tighter, you can see we're getting this pretty down to a fine art now with regards to our pullbacks and things like that. And the reason I do that is simply because it saves me going up to higher time frames. I can stay on my 1 minute. Okay. And again, we talk about price ranges and things like that. We speak about how we could see this serve a purpose today, this to this, pull it out. We could get a bounce into the 50% of here. Okay, we could get a bounce into 50% of here before we get a takeoff. So what I mean by that is price may come down and then bounce up into this higher end where we were looking a few weeks ago, or we could even, from that aspect, look on this area. They will be my two areas I'd be looking for at the moment, the day. From there, on the higher side, Let's take a look. Let's just get rid of that. Do that way. Get rid of that one. And you can see how price at the moment, the green line, it's coming up to respect this area at the moment. So I'm going to be looking at that as well on this side. Knock that out. Oops, let's get rid of that. That's generally the concept of what I'm looking at on those at the moment. So one of a couple of things may happen today. One, we may get, oops, we may get price come down, bounce off this level and go to the higher ones. Or we could get price come down, break out of here, test, come down to the lower side, and then take off. So my general bias for this morning, maybe something like that. One of those two. Be one of those two movements. So I'm going to set my goal posts. We're on the 1 minute. Let's get drilled in. You know the score. 8:30. Half 10. It's 30 AM. And again, this is just keep you from overtraining, keep you from overdoing the thought process. You only want to trade or try this on a demo and just keep yourself structured for the 2 hours, to be fair. And again, what the preference of doing this was for, it was simply, you should only really get, in theory, on a good day, 2 or maybe 3 trades. I'll say that again. And this happened yesterday. It was a perfect example. 2 or 3 trades. That's all you should be getting. On a bad day, you should be getting obviously no trades. Maybe 1 at worst. Let's have a look at this. And then we're going to have a look at the general area. Right, so again, we've had a good push. We've had a good push out of this sort of area. We've had a push out of that area at the moment. So we just make these bigger. Mark the low. You never rush yourself when you do this bit. That's the high. Low high. High high. Your lower high. Again, this is what helps you build an eye for structure. Makes you come attuned to uptrends and downtrends. So at the moment, we've got a higher high. and until we get this price coming back up to here, this would then become a lower high. Okay, that is a lower high at the moment, so we can mark that out. Okay, and chart is not behaving. We've got a lower high, and once this price decides what it wants to do, if it breaks above this, we've got a higher high. Okay, so at the moment, because we've got a swing point here, B, okay, I'm going to look at something along the lines because we broke the structure there. I'll bring that to a 1 to 3. So I'm looking at that order block there, and I'll explain why. Let's get a better color, purple. Right, so as we've come up, okay, you've got your high. You can see high, you've come down to make a lower high, you've got a higher high. So this now becomes our break of structure. So then what happens is your higher high, lower high, higher high. This now also becomes a break of structure. So from your higher high, you've got a lower high, and then you've got a higher high. Okay. So now again, this also has become a break of structure. So at the moment, we've got a lower high at the minute. So until one of two things happens, until that comes out the break structure, okay, so what we do is we'll just put a question mark. So at the moment, there's liquidity resides here, okay, so we're anticipating the break back down to the order block here, okay, to then come back up to come and meet liquidity on the high side. So what we can do, and I'm trying to make these as visual as I can. Template, and then you can go to save as. You can put what these are, so when you draw them out, you can see what they're exactly going to be. So this is the order block. Okay, we're waiting for the touchdown, and then hopefully price will come back up to go back to the higher side. If price continues, once it comes into touch into the order block and continues to drive down through here, okay, and it reverses underneath this, it then means we've got a break of structure and a possible reversal, but I'm still anticipating price to come down on here before going to the higher side, or price continuing breaking through here, not just the 50%, but breaking through this here to bounce back up into the contractual area to then take us down to the lower side on things before then giving us a big price push. Okay, so what we're going to do is, that's the analysis for this morning. We've had everything set up, we've got our buyers set up, we've got our charts drawn up, and I urge everybody, when you're starting your 2 hours, to do these sort of things, because it will help you immensely identify structure. It helps you identify breaker structures and things like that. Generally, it will save you drawing out fibs and all sorts, because price will always come back to meet within a swing point on an order block at some stage. Not always, but there's a good high probability that it will do this. So I'm going to stop the share, put on my cup of tea, and we'll be back in a moment. Hi guys, so we'll talk a little bit about asymmetrical compound for those that missed out on it yesterday. Again, there was a great session yesterday. I'm just going to stop the share, go back on the share, go on the whiteboard, and then hopefully you can see this. So yeah, what we've got is asymmetrical compounding. Okay, and I'm going to just talk a little bit on what it is. You can use whenever you enter a trade, okay, you've got a risk to reward. Now what that means is you're determining what percentage you're going to risk to whatever your TP area is going to be your reward. So again, let's say you're going to risk on your balance or equity or whatever at 1% on each trade, and we'll use this as easy terms. Okay, we'll just say conservative 3. Okay, like we've done yesterday. So you're going to do a risk to reward of 1 to 3, and this is how I've opened my eyes and how I now look at my trading as a number, a real numbers game, not a monetary value. Okay, I'll say that again. I look at this at a numbers game and not a monetary value, and you'll see, and I'll explain why this is and how it helps with the shift in mind and your trading and things like that. So let's say this trade wins. Okay, for risking 1%, you've gained a 3% return. Okay, now let's say this is your regular pattern of 1 to 3. Okay, so again, you go in on a trade at 1 to 3. Okay, and again, it wins. You've now won 2 trades, so that's 1 trade, 2 trades won. That 3% on the 3% becomes 6%. Okay, now what we do after 2 winning trades, your regular risk to reward, if that's what you're using each time, you 1 to 3, what you will do is you would plus these 2 together, it will give you 4. Okay, so let's say this is your regular R2R, okay, your regular risk to reward, right? Now, when you get two winning trades, okay, when you get 2 winning trades, you're going to do this calculation: 1 to 3 risk to reward plus these 2 together is a 4. Because you have attained 2 winning trades at 6%, okay, you're going to turn the dial on your risk to reward, and you're going to put it on steroids. So you're still going to go for a risk to reward of, again, 1 to 3, okay, because let's say that comes in again on this instance, because that's coming at 1 to 3 risk to reward, because you are risking now 4%, the 4 will replace this number 1, and then obviously your times in your risk factor. So then you've gained 12%. Okay, you gain 12%. So your 12 plus your 6 then will become 18%. Okay, when you do that, you go back to risking your regular 1 to 3. Let's say this loses, you're down to 17. Let's say 1 to 3, that loses, you're down to 16. let's see it loses 15. Let's see it again. It loses 14. Let's see again. It loses. I'm just going to give you a mind shift with this. 13. Let's see you start to hit a losing streak. Okay. And I'm just going to keep writing these down. Let's say you keep hitting a losing streak until you're down to 10%. Okay, right. And then let's look at this. So you've had 1, 2, 3 winners. Okay, you've had 1, 2, 3, 4, 5, 6, 7, 8 losers. Okay, 8 losers, 3 winners, and your account is still up by 10%. You see the shift in that? So then let's take a look at this. So then you start finding your sort of your mojo again on your trading. So you win takes you to 13%. Okay, let's see you win again. That's obviously going to take you to 16%. Now watch this. You've hit 2 winners in a row. So you go into the calculation. At winning trades, your regular R to R, 1 to 3. It could be a 1 to 2. You just do the calculation for yourself. So you're going, this one will be a 1 to 3, but it's going to be to the power of 4 risk. Okay, it's 12%. That comes in 12 on your 16. Okay. 28%. Look at that. You see that, guys? So on that, you've got 1, 2, 3, 4, 5, 6, 7, 8 have lost. You've got 1, 2, 3, 4, 5, 6. 6 winners, 8 losers, and you're still up 28%. It's so easy to apply this. It's so easy. And not only is it easy when you're going through these things like these challenges and things like that. Yes, you are at some stage on a risk to reward of 1 to 3, you're going to risk 4% on one trade. Okay. In the back of your mind, you're thinking, oh, I'm risking 4%. But what you've got to understand is your general general 2 trades in a row, 6%. If you lose it, okay, if you lose after your 2 trades, if you lose this big 4%, it is only going to take you down to 2%. Okay, now that's the sort of mind shift you need to get yourself into. So let's just get the eraser out. So let's just say from that aspect, I apologize, just get this eraser out, and then I can show you that if you lose from there. So you've seen what can happen even if you get so many losers with that. Okay, so let's say let's work out that obviously you've got 2 winning trades, 6%. You are now doing your next 1 to 3, but it's to the power of 4. Okay. And again, if that came in, you are getting 12%. So you will get a very nice return. Let's see. This. Let's see. Oh dear. We risked 4%, but it lost. Yes, it's going to play on your mind. This happened to us yesterday, but again, you've still got a 2% win, right? So it knocks you down to 2%. Now, let's say you go back to, you need winning trades, 2 regulars, two regular wins, okay? So then you're coming in at the risk reward of 1 to 3. It comes in, that's going to take you up to 5%. Okay, now let's see 1 to 3. Let's see it loses. Okay, so that's a winner. That's a loser. Okay, so technically that is still only a 1% loss because you haven't had two winners. Okay, so you still need to get these two winners in the bag. So you got 1 to 3. Okay, let's say this loses. That's knocking you down to 3%. So at the moment, you've got 3 for 3, okay? And you're still 3%. No, that's not bad. Let's say then you're going into your trades. You hit this, 1 to 3. That takes you back to 6%, okay? You hit your next trade, that's taking you to 9%. You then got this calculation to do. You've got a 1 to 3. It's to the power of 4, remember. So you're risking 4%. Let's see it again. It loses. So you risk the 4%. That's going to take you back down to 5%. Let's see you trade again. 1 to 3. You lose again, and then we're going to come up to the winners in a moment. I'm just showing you the philosophy behind this. That's taking you down to 4%. Okay, now we'll get the two winners and the winner. And then you've got your 3 there. So that's setting up. You've got a win, a win, and a win. That one will be to the power of 4. Okay. So you've got a 3%. A 3 on the 4 goes to 7. Okay. That one there, 1 goes to 10. Okay. And then you want the 3 comes in wins because you've done the power of 4. The 4, okay. There's 12% there onto the 10. 22%. So you've got 1, 2, 3, 4, 5. 5 losers. 1, 2, 3, 4, 5, 6, 7. So you've got 7 wins, 5 losses. You wouldn't expect to be 22% up on just having two more winners than what you would normally have. This is where it blew my mind, and it's a great concept. So I'm just going to stop the share. Go back on the share screen. We'll see where we are on the actual trade at the moment. At the moment, we haven't broke structure on the top, and we haven't come into play on the order block at the minute. And again, we are only risking 1% on these at the moment. To see what we can get. Okay, so I'm going to again pause the video. We'll come back in a moment, see if we get anything out of the trades today. And this is going to be the running theme throughout these next few weeks. We're going to be using the asymmetrical compounding, see if we can get 3 trades or 2 trades in a row to then activate the dial on that 3rd trade. So we'll see if we can get that done again, going on a day-to-day basis. It's not every day we get a trade, but over the course of a few weeks, there could be your day where we get the chance to do that speed dial sort of thing. Okay, so I'll come back in a moment. We'll see where we are with regards to the price action. We've got our buyers set, and not only that, again, I urge everybody to do this sort of stuff just so you know where you are in on the markets at any given time. Okay, so I'm just going to pause the video. We'll be back in a moment. Hey guys, so we're having a quick little look back on price action at the moment. As you can see, we had this little channel of an uptrend, and as we come down to make a lower high, we're coming up to make a double top at the moment. There's nothing broke the structure. If we break the structure and we drill a little bit further in, you know the crack by now, we would then start to be looking at this as a possible area for our order block. But until price physically sort of breaks, from this sort of area here, then we would not wait for this. And if you look at this in fairness, you can see that's where the pip is. We've just had a break, but I wouldn't really class that as a proper full breakout, even though it's took liquidity there. It's a little bit too risky for me. I mean, we could set the new order from here, to be honest, but again, for me, that may be just a little bit too risky in fairness. So again, I'm just going to stop the video. We'll come back. We'll see if we get the price breaking above here. It may very well decide that was enough, because it has taken liquidity, to be fair, to come down to test this sort of area. And what I'll do is I'll mark that bit out. Just so we've got an understanding sort of thing of where price might come to sort of come down and mitigate in to come up to. Okay, so I'm just going to put a question mark there. I like to mark these things out. I like to be visual with everything I do, and we'll just see what happens. If this does push straight out of there, things change. We just get rid of this bias, and we get rid of the question mark, and we get rid of that, and there we are. That has broke out as we speak. So there we have it, guys. I'm just going to make my wand a little bit smaller there. So what we'll do is we'll get rid of that bias there. We'll get rid of that. And we are now looking at, because we've had the break, I'll wait for the closer candle as well, to be fair. I want to close a candle above that line, even though it has took liquidity. So this is your low at the moment. So that's certainly a closer candle. We are now moving this to here. We move it up. This then becomes a break of structure. Okay. And now the order block, or what we expect on the order block area, is this bit here. Okay. So, and the movement, it looks like this is going to rocket off, to be fair. That's a 1 to 3 as well. We'll see if this comes down to meet price. Get rid of that. We'll pause the video and we'll be back in a second. So we're just generally pushing and moving with the trend. Okay, we'll see. We'll get this price reversal into here. Again, on that preference, that's the order block. That's price. That's where we've got the break of structure. Let's take a look. I'm just waiting for a pullback candle above that break of structure line, to be fair, because once we get a pullback candle, that's where my target area is going to be. We can see we've got 22 seconds. And what I mean by that, you can see just over here, you can see the seconds here. We need a pullback candle because the pullbacks have occurred from underneath the high, if that makes sense. So at the moment, price has pushed out this most certainly. So each push, we can just make this risk to reward a little bit lucrative by making it higher. We need that pullback. We need the pullback candle. So as it stands, we just keep moving price with our area. So again, what you can do is we can see that's the high. Okay. And again, you can clone this. This is the current high at the moment. And you can see from here, as you can see, that is the breaker structure. It clearly broke through. We're starting to get the pullback. Risk to reward of 1 to 4.24 on that. But we could take a 1 to 3. In all honesty, I'd be happy to take 1 to 3s any time of the day. But if it went to 1 to 4, that would be a bonus, to be honest. So there's our pullback initiating now. So that is now definitely our higher high. We're getting the return coming back in to possibly the order block area. 1 to 4. Let's just see if we can make this a little bit higher. $296,286. Nice. We'll have the risk reward of 1 to 2.86. To be fair, we'll give ourselves a little bit of breathing room, and we'll see. We'll get this pull back. Again, we always talk about imbalancing areas, things like that. Let's just see if we can see any footprints. Again, wick to this wick. That's an imbalance area there. So we'll see if this is going to get respected. From there, there's pretty much nothing there, to be fair, because we've already had a mitigation of the imbalance there. That's crashed through that. Okay, so as we're doing this live, get this 1% over here. The imbalance there has certainly been met. It's took the liquidity or the contracts from the buying side out of there. We've only got the imbalance on the bottom side here. So there's the price efficiency on this swing point here. The price efficiency we've got from the pullback up to this higher high, the price efficiency is pretty well being met, in all honesty, other than one particular area where you've got around about less than a pip of imbalance. So really significant wise, this does not hold any substantial sort of weight. So we might get another drive out of this higher high, if that makes sense, leaving more imbalances between these higher candles. And then this means we would be looking at the possible break structure and then return down to an order block here. But again, once we start doing that, it leaves not just the order block to be filled, but we still then have imbalance just underneath. So it makes the trades a little bit more risky, if that makes sense. We'll see if we'll get the push out on this. Time-wise, we can see we've got 40 seconds. This might just wick out and come back into the range, to be fair. Just going to scroll in. I'll be very surprised if we don't come back into this range at some stage today. This is a big range. From there, you've got roughly, that's around about a 24 pip move on an impulse move, to be fair. I do expect it come in to touch this at some stage later on. but EU has been on a huge downturn there for certainly the past 4 weeks that I've been live trading this for you guys. This has been on a massive downturn. Other than that, we've had the odd spike up, but from a longer term, higher time frame aspect, there's just been a big spike down, to be fair, from when we started documenting all this sort of stuff. And as you can see on here, we've got double tops starting to happen. So liquidity is holding and it's residing there. And the price action on the impulse, all we've got again, this imbalance was met. So again, we might as well get rid of that. At the moment, live, you've got that area there is imbalance. So again, I just want to be as transparent as I can and show you. We'll see if this comes in and meets that. And if it meets it, we might get the push to the higher side, taking out liquidity, then driving a higher high. For then, we will have a different order block to come into play with us. Let's just see what happens at the moment with price. I do believe, because we've had that big initial impulse before our goalposts, though, that we might start to have what we call, because it's gone to the higher side, we might start getting to what we call a distribution area, where it's going to sort of push and then it's going to just meander on the high side before it decides whether it's going to do the next initial impulse move or whether it's going to come back down to the distribution on the demand side, if that makes sense. So within our zone at the moment, like I say, we do have two areas that holds in balance. Whoop, it's back on, John. We do have two areas that holds in balance. This is going to be a risk trade of 1%. We are heading into our half time area, which is 9:30. Again, I've got to, I can't stress this enough. Setting your goalposts and doing your chart markups. When it gets to the end of your session, look back on what you've done. Look at the markups that you've created. Look at the areas of POIs and point of interest, as you call them, and understand the price action, okay? Understand the movement, because when you get these big impulse drives, you can see how price sort of reacts on the pair you're watching on the aftermath of an impulse drive. Does it create such a confined small pippage of range, or do you get a lot of wickiness? Is it creating patterns within there, like small harmonics or double tops, double bottoms? Does it respect liquidity areas on the high side to the low side? And you need to be writing all these things down. You need to be going on your charts and saving your end of session charts to a journal, just a notepad on a text document on your computer, so then you can time it. You can have it like, say today it is the 14th of October. 14th of October, Euro USD 1 minute chart, and then you can look back on and see how it's been, how it reacted throughout that session. Again, we've had the breakout there. Time wise, let's have a look. I need another push, to be fair, because it's right on the, see this here, it's right on the line. I want another push out before I'll look at any sort of other area. We've got 45 seconds. So here we can see where the time is, 37 seconds. I say this could just be what we call a little miniature fake out, to be fair. I like to see some good, not just the wick. The wick is a liquidity grab, but at the same time, if it's going to be a continuation up into the trend, you want to see some good wax on the candle, pushing out of there, driving back in to this sort of area. Okay, there's a doji candle here, indecisive. It's come back in 50% of that, and it's sort of mitigated into that pretty well. to be honest. We have got a little bit of wax, but I'd want to see a little bit more in all honesty. Again, I'll wait for this candle to shift before I make a decision. We've got 45 seconds, 40 seconds. So as we formed on the candle, okay, this candle here has taken the liquidity of that. So not only have we taken liquidity here, this is pushed out and it's took liquidity of this initial move as well, of this candle, if that makes sense. Because at the end of the day, each candle holds liquidity on itself. So push up, break a structure. Double top, we come down. Come up, break a structure. Come down, come up, break a structure. You see what I mean? This is how, on the concept of smart money to liquidity to other stuff, how, oops, let's go back to all the other stuff I've learned with regards to smart money, longer term trading and things like that. So I come across and combined all that goodness together and came up with this fire scalper method, which again is absolutely phenomenal. And combine that with the asymmetrical compounding, it is doing wonders, to be fair. So we've had that little bit of a push out. Let's just take a look. We could look at this is going to get more riskier by the minute. Let's see here, 2 to 2. I want to keep that imbalance there, that imbalance there. Let's make our one a little bit smaller. So this here could be risky, but we're going to go with it, okay? So there's still money residing within that. Okay, we'll get rid of that order block. We'll get rid of that. That has now become a breaker structure. Liquidity's been taken there. So the order block area I'm looking at the moment is this little pullback here. That will be that there, but I'm covering the risk, if that makes sense, by to that low of this candle. Again, order block. And you can see the entry's just above and I've got coverage just below. So we've got a risk to reward of 2.38. We'll keep that here. So what we've got now, guys, is a new lower. Okay, as we push up, because the higher high does not occur. The higher high does not occur until we pushed above this breaker structure. So that's the breaker structure. We've had a little mini pullback to here. So in essence, because that there has come down to here, this would be the lower low at the moment, okay? And we are still continuing up on that push. We are heading towards the higher side supply areas, risk to reward. We are expecting to come down for a 2.38. In fact, we need that to here because we haven't had an initial pullback after the break, to be fair. I wouldn't see this here. I would continue this up on the higher side, to be fair. Let's continue this up again. Risk, and as you can see, as we're getting higher and higher, we're constricting, so we are going to be coming into a phase of that distribution at the moment. Okay, we need this up to here. There's a 1 to 3 there. So we've got 50 odd seconds left. I'm going to pause the video, guys, and we'll be back in a second, and then we'll just see if this has been met. We're getting the drive up to the higher sides, to be fair. So I'm just going to pause the video. We'll be back in a second. All right, so we've had that little bit more of a push. The drive at the moment, we are looking at around about 1 to 369. We've got the order block here covering enough, because we've got to factor in the spreads and things like that. So we've now got the higher high. Now we just need to determine where the lower low is going to come in. Possibly looking at it, you're going to look at a push down, the lower low being here, and then a break to that higher side. That's what may happen. Again, what we'll do is we'll mark these up, because it's always good to have a little bit of fun with what we're marking up and things like that. What we want to do is get a bargain basement price, and we want price to drive down that little bit more from the top side, break through the imbalance in fairness to hit the entry, to steer within the structure of this protected lower high, then to shoot off. But there's every chance this will come down into the range of the breaker structure, hitting the imbalance area, okay, and then taking off to the higher side to possibly then do a reversal down to these areas to bounce back up. But we'll see what happens there. But like I say, our bias is more or less spot on at the moment, where we're continuing on the higher side. It's just price at the moment is not showing too much of weakness on the euro to be able to drive us down into those order block areas. But this is a patient game. This is where it teaches you to sit on your hands. And as long as you continue to draw and mark these areas up, the more sort of, what's the word? The more refined you're going to get in your own ability, and your confidence is going to build, because you are identifying structure, you're working through structure. And this only takes 2 hours a day. It can be any 2 hours you want. All I would say is, as long as when you're trading, okay, as long as when you're trading, you pick a pair that moves within that session. So like here, I've got the London session. Pick any pair within that works for you, that you feel works best for you. For me, I've come accustomed and attuned to Euro USD. So using this method has massively built my confidence and certainly my consistency, and it proves it on the last 4 weeks of trading that I've done 39%. And like I say, we talk about the asymmetrical compounding. I went back and done the analytics of using that aspect on just the regular compounding method, and that 39% would have been 115%. That is absolutely huge. That is absolutely huge, guys. Right, so again, I'm going to stop the share. I'm going to pause the video, and what we'll do is we'll wait and see what happens with price at the moment. I'm anticipating a move down to bounce off the imbalance to go up, but we want a better entry and better risk to reward via it coming deeper down and touching into here. From there, this will be a super tight stop loss. Again, in fact, we'll make that stop loss a little bit deeper. We'll get a 295 and we'll protect it from there. So it's a 1 to 295 because we only had a 1 pip stop loss. That would have been a little bit too crazy to go with. So pause the video. We'll come back in a second. Again, I do believe we might just push out and go higher. If we do, we're looking at this area then for the new sort of structure point. But pause the video. We'll be back in a second. All right, guys. So once again, we've had a break of structure, and we do not let this get to us. Okay, we are respecting the movement on price. We are respecting what price action is telling us. So we've now got a new sort of lower high to a certain extent. Okay, and I'll say that again, to a certain extent. simply because we broke that structure. Now we need to bring this up to the next area. Okay, and our high there's a 1 to 2. Our order block, let's get rid of that. Our order block now is technically that there, but again, just above the order block, just below the order block, just for protection. Visually, and like I say, I urge everybody to visually do these. Let's just get rid of that. And remember, we've still got imbalance underneath. And at the moment, we've still got imbalance here. Okay, so at the moment, we've still got price. We've still got price can come back as a footprint and want to take these lower sides out on this impulse move, if that makes sense. So if this is to break structure and come down and take out the lower lows, the lower highs, sorry, and take out this lower high, price will possibly want to do one of two things. It will mitigate one of these two areas. Okay, now can you see the power in why I start to build my path? I'm leaving breadcrumbs behind me, if that makes sense. I'm leaving my breadcrumbs behind me so I can look back and see what sort of trail on where price has been, the gaps of where price has left inefficiency. So if we do start to come down and break our structure point areas, we can generally see, yes, we've had a fail. Yes, we had a loss, but let's understand why that loss is. Is it because it's coming back in to mitigate on one or two of these areas? So we're basically three things why this could fail. And I'm saying this before the head of time if it does happen. One, it could be imbalance here. Second reason why it could fail is because price wants to take imbalance. Two, the third reason why this may fail is because it now wants to come down and attack these lower highs, which means if it does come down, bounce up onto here and then come down, it is a price reversal. Okay, because technically this bit here, what we have here on the path, okay, got that, technically this here is still an impulse drive, okay, if that makes sense, because you've had the pullback. That there is an impulse drive from the initial part. So we have a price range at the moment from that structure to that structure. We've got a price structure. Again, the imbalance is more or less 50% in. We're in on the trade at the moment now, so it's live. So this may be where this is going to attack. So this has sort of got a few alarm bells ringing off for me. Let's go back. It's got a few alarm bells going off for me. We might get a massive down spike to come in to take this one, to take this area out. We'll see if that happens, to be fair. We're going to drill into price, see what happens. So we'll see if we'll get our it's a 1 point, so we'll get this a little bit, 1.78. We'll keep it at a 1.78 because that's where we ended at, to be fair. See if that pushes up, see if it gives us that. And if it does, happy days. It just means we've got our first one in the bag. We then only have to hit a second trade. After that second trade, remember, we go into asymmetrical compounding and we turn the dial. That turning of the dial might not happen today, but it's going to keep you tuned in and want to watch the next episode of what I do. So if we do hit this, happy days. It just means we are on the next step to possibly getting that dial to turn the dial to get an asymmetrical compounding effect. So again, we've nicely on the way up come up and sort of broke structure, broke structure, broke structure, broke structure. But each push, as you can see, to the return, the higher highs are getting more and more restricted. So possibly we might get on here, we might get liquidity double top, if that makes sense. We might get a mitigation on a double top on this side, and then we might start seeing some sort of reversal, but it's heading towards there at the moment. This is a good sign, in all honesty, because it's now coming past this high point here. We'll keep pushing. Hopefully, we'll get in this 1.78. So what I'm going to do, I'm just going to pause the video. We'll come back in a second, see if we're getting our first trade in for the day, see if it comes through, and then we'll take it from there, guys. As we come back down into price, guys, we can see we are heading. I mean, I was expecting stuff to come down to here. We've come back down to the entry level. Excuse me. We are on a risk to reward of 1 to 1.78. We are heading into the last 20 minutes now. We are in this trade. So even if it gets to half past 10, we are in this trade no matter what, even if it's still live at that time, because it ended basically at around about 10 o'clock. Now, as you can see, we are at 5 past. So we've had, just to show you, we've had this expansive move, okay? But when you look at the pips, there's only been 3 pips move within the last 20 minutes. So this is telling me price is getting exhausted for sure. So again, this is there going to start to be a price reversal down to this imbalance area? If again, we look at fire zones, we can see where these imbalance areas are. We've got an imbalance area right slap bang in where we have a fire zone here, okay, and one just below the middle zone. These 2 middle zones hold a lot of significance with regards to from a swing low or a swing high where price could come back to mitigate into. But again, we want this drive to, even if it was to give a double top, I'd be happy with that because it would close this out at a 1.78. So we've got a lot of significance where price resides on these 2 areas. I'm just going to get rid of that. But more importantly, as price is driven up, the footprint and the breadcrumbs that it's leaving, most certainly these 2 areas is where we only have sort of imbalance. So I'm hoping that this structure holds where we are at the moment. Hoping the structure holds and it gives us that push out of this area here and up to the 1.78. Let's see if it gives us that at the minute. If it does, what we'll do is from there, if it closes us out at a -1, or if it gives us the 1.78 for today, we'll close the trading session for today. We'll have a look at what we've done. We'll have a conclusion for the end of day results. We'll have a look at the chart and go through the playbook, play by play, and then we'll have an end of session chat as we always do. Okay. So what I'm going to do, I'm going to pause the video. Hopefully this is going to sort of play out one way or the other at the moment. Either way, we aren't fussed. We just learn from what happens on the price action and the movement. Okay. So I'm just going to pause the video. We'll be back in a second. Hi guys, so let's drill into this a bit more. There's your 1.78. It has filled to the pip. Again, drill in. You can see it's come up and it's mitigated in that area. That was the actual area, to be fair. Can we get on that? No, we can't. Let's get rid of this pip. I was trying to get this pip trading. So it was a risk to reward of 1.78. Just make sure that still says that. 1.78. Let's head over to, let's see here. So we've gained So we've got 1.78 gain. 14th. 3.78 altogether. So again, we need 2 wins in a row before we can start doing the asymmetrical compounding, okay? So we missed out on the chance to sort of turn the dial, and we got that minus, the minus, in fact, no, that there is a 1%, okay? I do apologize. So we've got a 1% because we had a -3. No, yes, that's correct. 5%, we had a -3. So that takes it down to, that was a 2% growth. My apologies. And then obviously your 1.78. So that's a 3.78 gain for this week. And again, let's take a step back. Let's have a look at what 3.78% could mean. 2 days worth of trading, okay, 3.78. It's more or less halfway towards attaining a level of a pass with either FTMO, my Forex funds, or whatever prop firm that you're using. So again, I'm happy with that. Let's go on to the chart itself and have a run back and a look at the general concept of our goalpost area and how the day panned out, okay? Because I like to do this. Let's revisit what happened. So we had a general bias, and I still stick by this bias. I was expecting the run to come up to here at some point. I was expecting a play down to here before the push up. It looks as if the euro was strong, the USD was weak, so we had a continuation of trend prior to us entering our 2-hour session, okay? We had lows, highs, lower highs, high highs, lower highs, high highs, lower highs, high highs, lower highs. And if you look at the concentrated area of that initial impulse drive, the reason, again, we put this path on is because when you can put this onto the 1 minute with the definitive swing points with the high to the lows, you are creating a higher time frame sort of outlook and price range from when you get the pullbacks. But more importantly, this zigzaggy you see in that directional path of play is going to give you an intermediary price, and we can overlay the higher time frame to that lower time frame. Thus, if we get any pullbacks from a break of structure, in this instance, on this continuation of trend on the high highs, when we get the pullbacks to make the lower highs, we are expecting within the price range of the previous swing to have that order block mitigated, okay? Now, this is the easiest way and method of trading a sort of smart money style, a sort of smart money concept. And again, I don't make this stuff up. This here created 39% growth going on the last 4 weeks of last month. So the run of play, we had a continuation of trend. This was around about, it was a good push, to be fair. This was worth around about 24 pips, which is fantastic when you think about in the price range itself, okay? The range itself was around about 2 hours in itself. So that there in itself was worth 20 odd pips. Now, when you look back on this, okay, you've had the push out, break of structure. Previously, look at that. That would have been a win because it's come in to mitigate. You've come up, break of structure. It didn't come into play. You would have had a 1 winner there before the run of play into our session, okay? Now, as we went into the session, we did our directional bias. From there, we had a lower high, okay, as played in this trend. We broke the structure of this. Now, this is when it started playing out for us, and we were looking for those initial pullbacks, okay, to come into play onto these lower order blocks. And it went once, went twice, 3 times. And then on the 4th time, we hit our order block entry. Again, we let price come to us, okay? You don't go chasing price. Scalping is scalping. A lot of people just get in thinking they're going to get in on certain things where moving averages and things like that. Cut that out because it can hurt you more times than enough. This is a more structured approach. You have your goalposts, you have your swing points, you have an area where they have to come back and do one of two things. They either have to come back to mitigate if the price is playing the way it should, or it'll just break through that and just become an invalidated sort of structure point. So we got that at the end on here. From there, we were looking at marking up and laying our breadcrumbs, as I call it, as the continuation of prices going up. This structured move going up here, or this impulse drive here, we went up onto a higher time frame. You would see this would be possibly one drive in itself. We created pretty good price efficiency on its way up, creating from the lower high, the high highs, low highs, high highs, low highs. And again, if we to complete the pattern, okay, complete the pattern, because what we want to do, we want to save what we've done. And then now what you've got here is, that's your higher high, okay, that there has now become your breaker structure. We could technically be waiting for, if I wanted to, but like I said, I'm not gonna get in on the trade at the moment. We could be looking at a trade at around about here, going for a 1 to 4, just about, in fairness. We could be looking at that, but because price is starting to squash in itself, I don't think I would risk that. I don't think I would risk that, but it is a possibility, again, to mark it up. What we'll do is, for fun, we'll have that marked up. I'll put a question mark on it. We'll revisit that tomorrow, okay? Risk 1%. So that was a 1.78% gain. Okay, that came in. And you can see now, look at price. Price is now starting to rocket off. Really is starting to rocket off. Big drive up before the half-10 finish. So I'm just going to get rid of that now. I'm just going to get rid of that. So that is the run of player by player. You can see the importance on why we do these on structure points, and the importance of it. Again, at the end of a session, you could always come down, see what you've got, click on there, click the chart image, save it to a text document, and then document that as the 14th of October, and do these each day. Look back on your bias at the end of the week, see where you are on an Excel sheet, see what growth you've had, and then you can see and look back on how you have done, okay? So just going to stop the share. Again, share the screen one last time. We've got a 2% growth yesterday. At the moment, $1.78. We need one more. We need one good trade tomorrow, and then on the second trade, if we get 2 trades tomorrow, the first one comes in. If we go for the second trade, we are going to be turning the dial on that asymmetrical sort of trading sort of stuff. So again, I'm going to stop the share on that bit. So we're on 3.78 for 2 days of trading, and just maximize that and just give you my final thoughts for the day. So yeah, we started off the day, like I said, goalpost, imperative, doing the structure. When you first start doing these and you start getting into a rhythm of these, you might start going through an emotion, which it's not so much called greed, but it may be an emotion where you think you're missing out, okay? watching these videos and seeing how I do these, okay, and seeing you've got your impulse, your pullback, create on this instance, creating a higher high, and then your sort of higher low. Yeah, it'll be a higher low. I think I was getting them wrong, was I? Let's have a look. So have I been calling them wrong all this morning? Lower, higher, lower, man. Silly boy. It's a higher, low. Higher, low. Higher, low. Higher, low. It's a higher, low. You couldn't make it up, could you? Higher, low. Higher, low. I thought I'd done something wrong there. Yeah, so let's go back. Stop share. So yeah, so we see the importance of what I do on a day-to-day basis. And again, don't think you're missing out, because we structurally, you have a swing, okay? Point A, point B. You got your low, you got your high, okay? You wait with that price range, there has to be a new structure point. As you get the new structure point, you are then getting around about 50% of this area. When it comes back in, it's going to be mitigated, but we are refining it down to the last swing point, which is the last sell before the buy area. We want price to come to there. So it doesn't matter if it just starts coming into there. Do not sort of trigger the trade because it is there or thereabouts. You want price to mitigate off that area. And doing so and being patient and just concentrating more at this stage on drawing your charts out between your goalposts for them 2 hours. Just concentrating yourself on doing that will give you more confidence than the trades coming in and entering and then going on to the take profit, or entering and then failing, and then you understanding where it went wrong. Drawing out these charts and doing it on each swing point, your highs, your lows, your higher highs, your higher lows, and things like that, your paths, your directional bias, your order block areas, drawing up your TPs, entries, take profits, and entries, and also the order block stuff. Drawing those and laying your breadcrumbs as the session goes on, and you start looking back on what you've drawn up, you can start looking at these points of interest. And again, you'll be able to in the future, once you start getting a number of these under your belt, you'll be able to start look at the charts and just think, I can see that there instantly. And you just draw, it's like you look at it and you're just drawn towards that point of interest, and then it just becomes second nature. It took me in the 4 years of that sort of stuff, it took me a good 2.5 to 3 years just to get to that sort of level, because I didn't have the help or the direction or the know-how or shown or led by the hand on how to do it. With me doing these videos, even if you watch these on a day-to-day basis and just learn, take notes, and if you do get any sort of light bulb moments and value from it, take note of the date, okay, and notify, say, like if it was in balance or if it was the path that I was showing you, if it was the goalposts. Write down what give you that understanding on that particular date. Timestamp it as well on your notes, right? At this point of 50 minutes and 10 seconds, this was mentioned with regards to high and low trends continuation. And then when you want to know a little bit more or want a refresher, you can go back on that video, okay? So today's been another good session for me personally. I'm going to be going back and watching this as I always do. I'll go and now have a cup of tea, watch a film, and then as I'm encoding this, I'll watch back what has been done throughout this session, and then I can take notes on that myself as well, because this is a learning lesson for me as well, guys. So I hope you've taken a little bit out of today. Let me know in the comments, give us a thumbs up, hit the join button if you are getting that value, because moving forward, when I get into, I think what I'll do is the start of the turn of the year in 2022, what I'm going to do is I'm going to start possibly opening up what I do on a morning to people that are supporting the channel and being able to come and watch what I do live on a day-to-day basis. Sorry. So that's what I'm looking, and that's what I'm looking, heading towards the people that are supporting me and supporting the channel. Whenever I do these sort of sessions, they're always recorded anyway, and it's always live, so certain things, sort of thing. But you'll be able to come and watch what's happening going on the day-to-day basis live, and that's what I want to do. But when I do that and I go to that, this will be to concentrate more heavily on giving you an understanding on what happens within price action, what happens within the price range, what we are going to anticipate, the sort of footprints that an impulse drive leaves behind, and where and what areas could be a possibility of mitigation. Okay, guys. So again, please give it a thumbs up. Let's see some engagement. Let's see some comments in the videos. Okay, because I know there's a lot of people watching the videos, but I always get the same one or two people that are sort of leaving me a comment. So if you can do, please leave us a comment and let me know what you think of today's video. See you later.